In my previous videos, I talked about how we should be keeping an eye on these technology-driven stocks, i.e. artificial intelligence and quantum computing. And last week, the quantum computing stocks completely tanked, actually dropped by like 65+% on the news that Jensen Huang, CEO of Nvidia, and then Mark Zuckerberg afterwards, they made a statement that the commercial use of quantum computing is decades away. On their statement, those stocks completely crashed, like in a day, 65+% drop. That was a huge drawdown because I also own one of those stocks and I was like, damn man, 65% in a day. But then this week, actually today, those stocks came back even higher because Microsoft announced that they're going to commercially release some of the computers which will be available in 2025. So it tells you there is a lot of volatility happening right now and it is going to continue. Why? Because there is a clear divide between the real economy and financial economy. Real economy is job numbers, unemployment, GDP, credit card debt, how much layoffs are happening. That's what it matters in the real economy. And that's really important for us to understand. But the financial economy is completely detached from it. So when you look at the real economy, even in the US, it's not in great shape. You have to look into the unemployment numbers. You have to look into the GDP. CPI came a little bit lower today. But then the credit card debt, like it is exploding, right? So the real economy, yes, it's better than Canada and the rest of the world, but it is still not the best. But when you look at the financial economy, it is exploding like no tomorrow, right? Because the financial economy runs on cheap money, okay? Federal Reserve already started their rate cutting cycle in the time when the liquidity was flowing into US from rest of the world. Like if you look at the global liquidity, it is flowing into the US from the rest of the world because when other central banks in other countries are easing, and on the top of that, the Federal Reserve is also cutting rates aggressively. What do you think is going to happen? It's going to explode the equity markets, and this is exactly what's happening right now. So we're seeing stocks going higher at the back of the unleashed liquidity we're seeing right now. Problem with that is whenever you see a conflicting statement, we see a major volatility in the market. That's exactly what we saw last week with quantum computing. And we also saw today how with the news of CPI in the US, the market, went bananas. Equity markets went up, crypto market went up, quantum computing stocks went like 30-40+% in a day. So that's really what it is telling us, that these time that we are living in, we are going to see more wild volatilities going forward because there's a clear divide between the real economy and financial economy. Real economy is struggling, but financial economy needs cheap money. And as long as we are seeing cheap money coming in the form of lower interest rate, global liquidity going up, global M2 going up, while everybody's easing, we're going to see stocks going to perform well, but then it is going to have a lot of volatility because as soon as you see some negative statements comes out, you will see major volatility in the market. As an investor, we should be taking advantage of these volatilities because volatility is a feature, not a bug, especially in crypto market. And this is where the prudent traders make a lot of money, but it's not for the faint-hearted. Okay, be careful. Anyway, let me know what you think about that. Put your comments down below. Let me know how are you managing your portfolio. And if you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Take care. When it comes to investing, staying informed is everything. That's why I've been diving into Momo. It's got some tools that are pretty useful for navigating today's market. For example, Momo gives you free access to real-time level 2 market data, advanced charting tools, and professional-grade research. The kind of stuff that you usually pay extra for on another platforms like QuestTrade. And let's not forget the low FX fees. If you are trading in the US stocks, like myself, I don't trade TSX. Those savings can really add up over time. Pair that with the insight that you're getting, it's a game changer for making informed decisions. Plus, While you're waiting for the right market moves, your idle cash earns a solid 6% annual return through their cash plus feature. That's a nice bonus. So whether you're trading actively or just keeping an eye on the market trends, Momo is definitely worth a closer look. So you can start investing today by clicking on my referral link, which will give you $50 free credit to start with. Thank you, Momo, for sponsoring this video. Nothing from this content should be deemed as a financial advice. Please consider all the risks associated with the investing. Terms and conditions apply. Financial education is very important for everybody, especially for the kids who are still at school, because when they grow up and go into the professional lives, if they don't know how to manage their finances, that is going to be a disaster to begin with. I have just published an ebook for the kids aging between 10 and 16 years to understand how they can manage their finances. So when they grow up, they know exactly how to manage their personal finances, because I have broken it down at a very, very basic level. What is money? How can we save? How can we invest? What is debt? How can we use debt? What is credit card? And how we can set ourselves for the financial future when we go into our professional life. So if you are a parent looking for a very simple to use ebook for your kids, click the link below to order the copy for your kids and let me know what you think about that. Let's get back to the video.